Hey guys, hope you and the families are doing well. Quick video for you on how to play gap ups when there is a significant news catalyst. Now that news catalyst could be earnings, it could be the addition to a major index like we've seen with PLTR recently, and the news that it's going to be added to the S&P 500. It could be an agreement or a collaboration with a much larger company, which really changes the fundamental prospects of said company. It could be a biotech company reporting very positive phase 3 trial data. The key is though that it is a significant news catalyst and it is causing the stock to gap up and gap up big. Then there are 7 keys to really be focused on with these gap ups that I'm going to teach you as we go through 3 examples. Before we get into it, let you know that Market Surge are today's video sponsor. If you're interested in a discounted trial, then you'll find a link to that in the comment section and the description below. Okay guys, we've got 3 different charts loaded up. We've got PLTR, we've got Summit Therapeutics, and we've got Shark Ninja. Now the reason for the gap up is different on all of those, and I've done that deliberately to help illustrate and teach during this video. So PLTR, the reason for the gap up here was the news of it being added to the S&P 500. For Summit, it was the positive phase 3 trial result, which caused this gap up here. For Shark Ninja, a little bit more standard, it was an earnings gap up. So each of those are going to be a little bit different. Across the top, they're going to be daily charts, and then below those, what I've done is zoomed in across different time frames so I can show you what it was looking like on the gap up for some of the specifics that you want to be looking for. So PLTR, we'll take a look at that on the half-an-hour chart. Summit, we'll look at the 5-minute chart, and Shark Ninja, we will look at the 15-minute chart, and we can start diving into some of the specifics for actually where do you want to be entering, where do you want to place the initial stop loss, and potentially trade management there afterwards. But let's start off with the 7 keys to really be focusing on with these type of setups. Number 1, you want there to be a big news catalyst which is causing a significant gap up. So that could be news of the addition to the S&P 500 or NASDAQ 100. It could be a biotech company reporting really positive phase 3 trial data or phase 2 trial data. It could be a company that just came out with a blowout earnings report and they're doubling their forward guidance for the next year or 2. So something like that, something meaningful for the company, which is obviously going to be very specific to the company. Number 2 is the stock has been basing, not sure what's the correct terminology there. But anyway, if you look at PLTR, right, the stock's in the context of an uptrend, it's pulling back down and building this downwards trend channel, and then it breaks out of the downwards trend channel and also starts breaking above the recent high set around about 3 weeks ago or so. If you look at Summit, kind of a little kind of flag into the 21-day EMA, but it's breaking above those highs. You look at Shark Ninja, okay, it's kind of basing here, puts in a big gap down reverse bar here, but it's then breaking out above this trend line. It's breaking out, so note the basing action prior. The entry around or above base highs. So if you look at PLTR, when it's actually breaking out, it's above the base highs or around base highs. Summit is above the base highs. See, that is above the base highs. You look at Shark Ninja, it's breaking out, it's pretty much at and then moving to above base highs. Number 4, price above all key daily moving averages. So for me on my charts, I use the 10-day, the 21-day, the 50, the 65, and the 200. Okay, so I want price when the entry happens to be above all of those moving averages, because then I'm going to be using those as trailing stops for all or part of the position. I may stagger it and go a bit with the 10, bit with the 21, maybe a bit with the 50. It depends how it plays out. Number 5, I want there to be very high relative volume occurring. I want there to be a shed load of buying, and visually I want to see buying. I want to see strength, I want to see demand, I want to see people are buying within the kind of opening ranges for the stock, 5-minute, 15-minute, 30-minute, so on and so forth, right? I want there to be bullish price and volume action. Don't worry, we'll go into some of the specifics here. So if you look at Summit, it gaps up. There's very large relative volume coming through. I don't think you need to go all kind of fancy and use like a TC2000 vol bars. You can just eyeball it, have like an average volume on your charts and go, wow, that's a lot of volume coming through on a relative basis. It gaps, and then what do you notice? Gap, open on the low, pushes up, strong close. There's a lot of buying there right on the open. That is what you want to see. Lots and lots and lots and lots of buying. That's good. The initial stop loss around or less than the 20-day ADR percentage ideally. So I like using these 20-day ADR percentages. It's just a nice metric to know, 1, how quick the stock is, but also thinking about initial risk relative to the stock's 20-day ADR percentage. So if we go into, say, a specific one, okay, like Summit, you can see the gap up here, and then what do you notice? There's very large volume coming through, and in the first 5 minutes, what do you get? So on this bar here that we're looking at, what do you get? You get what I call bullish synchronicity. There is a synchronicity between what the price action is doing, the fact that it gaps, open on the low, strong close, widespread candlestick, good volume, confirming the move. That is visually what a lot of accumulation, a lot of buying looks like. That's what you want to see. If you contrast that with PLTR, so I took both these trades in Summit and I took it in PLTR as well. Now PLTR actually has what I call a supply supply shoot. So you see how price, it gaps, it opens here, there's high relative volume, it's breaking out above that downwards trend line on the daily chart here, but you see how there's this supply shoot. So what does that mean? Price tried to go up, and then sellers for whatever reason sold into it a little bit. It then did actually recover much quicker than I was kind of expecting, so then I took it here, but I was kind of umming and ahhing going, do I, don't I? But Summit in the first 5 minutes in terms of that candlestick and what that represents from a supply and demand perspective is a lot more bullish than PLTR. So I would trade Summit, all things being equal, more aggressively than PLTR, because early on I'm going, there is a lot of strength there, there's a lot of buying. That is what you want to see. You don't want to see it getting sold into a big gap and fade. That's not what you want to see. You want to see strength. So if we go for Shark Ninja over here, okay, so we're looking at this here. So it gaps, it takes out the high, breaks this downwards trend line. You can see the large relative volume coming through. You could look at the earnings. You could look at, okay, has the company just reported earnings and sales that just blew out estimates? They raised their full year guidance as well. They've just announced a new kind of a contract or award or something like that with another company or a government agency or whatever it may be. But you see how the stock gaps, it opens here, puts in this shakeout demand tail, strong close, and then look at the follow through buying. That is what you want to see. So with these earnings gap ups, be looking for these 7 key points: a big news catalyst, stock of beam basing, entry around or above base highs, price above all key daily moving averages at the time of entry. You want to see high relative volume. You want to see bullish price volume action. You want the initial stop loss to be around or less than the 20-day ADR percentage. Search ADR percentage in TradingView indicators and you will find it. So it's not that complicated to trade these kind of gap ups like this. They are the things that I would be I'd be focusing on. In terms of the management, I would then use key moving averages as trading stops. Say the 10-day, say the 21 gets extended from the 10-day. I may think about choking some off, going say lower the day or something like that. But not that simple, or it is that simple. It's not that complicated, but you can be looking for all these kind of gap ups. You can be using TradingView, you can be using like the likes of Benzinga as well. But hopefully that short video there was useful for you in terms of teaching you how to trade these gap ups when there are significant news catalysts.